always lived by the principle that we've got to worry about our earnings and our cash generation, and sort of let the markets decide on the appropriate price, on the appropriate multiple, etc. We've had, I think, two significant events. Obviously, the large write-off last year of 374 million would have spooked a lot of people. It took half of our equity base out. It was a significant event. It had a big cash impact on the business. So, the markets will obviously want to see how we recover and how the business turns around from there. In the saying of our mining business, we never like to waste a good crisis. So the fact that we're already going through the turmoil meant that what we needed to do in terms of realigning our business, in terms of client centricity, we couldn't delay that any longer. We had to change the business model in terms of how we operate. So that's brought more uncertainty, and with it more cost. There's no doubt that realigning a business the way we are busy doing, which is a deep fundamental change to how we operate, costs money. It results in duplication of costs for some time, and we saw it in the interim period where we've had duplicate costs in the business. It's a case of investing now for benefits that one will only see typically in 12 to 18 months' time. So, not to second guess where the market's at, but I suppose people want to sit back and see. They want to start seeing the delivery. We had built up, the time that I've been with the business, we had built up a good track record of growing revenues, commensurate growth in bottom line, cash generation, etc. And we achieved that over a long period of time. And then we had this once-off event that kind of set us back quite significantly on that path. And I would guess that people want to see, the sort of get us back on that earnings, cash generation, get us back into that right cycle. A 6 PE does sound low, but I suppose it's more a question of what your views on where the business is going. We've worked hard to stabilise balance sheets, correct some of those issues where there were criticisms, which I think were fair after the significant write-off. But now I think it's a question of pulling through with the earnings and starting to see the benefits of some of the investments that we've been making over the last 6 to 12 months. Some people want to see, it depends on how early you get in on the investment cycle. Some people want to see long periods of track record before they invest, and perhaps by then, the re-rating will have happened, and the opportunity may have been lost. So, from our perspective, we think that what we're doing is the right thing, and that it will yield certainly medium-term benefits, and hopefully the share price will reflect that.